Hello everyone, welcome back to another video. In today's video, we are going to talk about case-based interview questions. This is going to be a very important video because I have not covered any case-based interview questions till now. So make sure you watch this video till the very end and understand how to answer case-based question. So without any further ado, let's get started. So the scenario is your company made a credit sale of 5 lakh rupees on 31st of July. However, this transaction was not recorded in the books of account. So you need to tell what are the various areas where it will impact the organization. So before I share the answer, pause this video and think for a few seconds what are the different areas where this is going to impact the company. Once you are done, let's move forward. So what are the areas it is going to impact because of this miss? First thing is it will impact the revenue recognition of the company. Then it will also impact the accounts receivable. Then it is going to impact the profit and loss statement. It is also going to impact the working capital calculation. It is also going to impact financial ratios. It will impact the cash flow statement. It will impact the tax reporting. And lastly, it is also going to impact the management decision making. So one by one, we are going to cover each of these categories in detail. Starting with the first one, revenue recognition. So we have made a sale of 5 lakh rupees, but we have not recorded it. Due to this, what will happen? Our revenue will be understated by this amount. Moving ahead, now let's talk about the point number 2, which is accounts receivable. So we are assuming that this is a credit sales, due to which what will happen? Our accounts receivable will be understated by 5 lakh rupees because we have not recorded a sale transaction, due to which our accounts receivable will be understated by 5 lakh rupees. Moving ahead, now let's talk about the third point, which is it is going to impact our net profit. So because we have not recorded any sales in our journal ledger, we won't be posting anything in our profit and loss account, due to which what will happen? Our net profit will be also understated. But why I have not mentioned 5 lakh here? Because 5 lakh was the sales amount, but the net profit will not be the 5 lakh. It is going to be a portion of it. And as we don't have the profit ratio here, so we have not mentioned any amount, but our net profit will be understated for sure. Our next point would be working capital calculation. So how do we calculate the working capital? It is current assets minus current liabilities. So because accounts receivable was our current asset and it was understated because of this miss, so it will similarly going to impact the working capital calculation, and our working capital will also be understated by 5 lakh rupees. But here is the catch. We can say there will be no impact on the working capital as it will get compensated with inventory account because we forgot to record this transaction in our books of account. But in the month when we will receive the cash against the sales, in that month, our working capital will be impacted and it will be overstated. Moving ahead, now let's talk about the key financial ratio this transaction is going to impact. So first one is gross profit ratio or gross profit margin. Second is current ratio. Third is return on assets. Fourth is debtors turnover ratio. So these are few of the key ratios which is going to impact because of our miss or fail to record the transaction in our books of account. Moving ahead, now let's talk about the cash flow statement. So it is not going to impact cash flow statement immediately, but the month in which we will receive the cash, it is going to impact our cash flow statement as well. Moving ahead, now let's talk about the tax reporting. So because we have not recorded any revenue, so if we won't record any revenue, we won't calculate any additional income. And based on that, because our income is understated, our tax liability will also be understated or lower than actual amount we should be paying or calculating as our tax reporting amount. And moving ahead, now let's talk about the last point, which is management's decision making. They might end up making poor decision based on the data they have received. So it can impact their decision making as well. So you can see we had only a small mess but there are so many areas where it impacted. And if in your interviewer asks you such case-based question, you need to think like that. There are so many more areas which we can cover, like the reconciliation part. We have not mentioned about any reconciliation, but you can see accounts receivable reconciliation, sales reconciliation, and so on. If you want to answer this question, you can think of so many other options as well. These are only few of the options which I have selected for answering this question. So based on your knowledge and your understanding, if you identify any more areas where this transaction is going to impact, feel free to write in comments, which will help others as well. I'll see you soon with next video. Till then, all the best.